Ledger Digital files for Chapter 11 bankruptcy.
Yeah, this is the third major crypto company to file for bankruptcy.
I literally just got wiped out.
So, you're thinking of buying cryptocurrencies. Making money in crypto is definitely possible, but only if you avoid making the same mistakes as everyone else. We want all our viewers to make the most profitable investments from day one and have the tools to succeed in the crypto world. So, in this video, I'm going to show you the biggest mistakes people make when buying cryptos and how you can avoid them. Hello and welcome to Crypto Dogmas. If you're watching this video, then you're probably interested in buying some cryptocurrencies. Well, before you do that, there are a few things you need to know. So, let's get started. Not choosing the proper crypto exchange. When it comes to choosing a crypto exchange platform, there are many things that you need to take into account. Here are some of the most important factors. The simplicity and user-friendliness of the platform. Make sure the platform is easy to use, or you could lose money through mistakes. The selection of cryptocurrencies available. You don't want to be stuck with a limited range of options. Low fees and reasonable asset prices. This will save you money in the long run. The ability to buy crypto directly with your local currency, fiat. This makes things much easier for the users. Platform authenticity and security. Check reviews before signing up. Make sure the site is safe to use. Educational content. Some exchanges offer helpful guides and articles to help you get started. Reliable and personalized customer support, in case you need any help along the way. Regularly updated security and cold offline storage, to keep your funds safe. These are all critical factors to consider when choosing a crypto exchange platform. Make sure you do your research before signing up to avoid any costly mistakes. If you'd like to know more about how to take advantage of a bear market and potentially become a future millionaire, make sure to watch our video in the top right corner. In this video, we'll explain the power of dollar cost average and the winning mentality needed to come up on top of a bear market. With that said, let's get back to it. Not knowing what a good investment looks like. When it comes to investing in crypto, you won't get far without knowing what a good cryptocurrency investment looks like. A good investment will have a unique function or utility that it brings to the ecosystem, as well as a diverse community behind it ready to adopt its use case. It's also important for the coin to have a reputable team of developers and a well-written white paper. Finally, make sure to check out the roadmap for future development. This will give you an idea of how committed the team is to their project. In such a competitive marketplace, for a crypto to succeed above all the others, it must possess a unique function or significantly improve on an existing technology. A crypto's ability to solve a problem in the world is what defines whether or not it will succeed in the long term. So, when you're looking at a potential investment, be sure to ask yourself, does this coin have what it takes to make a difference? Does it have a function that no other coin in the market can provide? If the answer is no, then you might want to reconsider your investment. Of course, there's more to a good investment than just its utility. The price of the coin is also important to consider. A low-price coin may seem like a good deal at first, but if the coin doesn't have a solid community or development team behind it, it will likely not go anywhere. On the other hand, a high-priced coin may seem like a risky investment, but if the coin has a strong backing and is being actively traded, then it could be worth your while. Remember, cheaper does not always mean better. When it comes to cryptocurrency, you need to be sure that you're investing in a project that has long-term potential. So, do your research and don't let the price tags blind you from making good investment decisions. Not doing your research. Everyone's talking about cryptocurrencies lately, and for a good reason. They have the potential to make you a lot of money. But before investing in them, it's crucial that you know what you're doing. Unlike traditional currencies, cryptocurrencies are digital and decentralized. That means they aren't regulated by governments or banks. That also means that their value is highly volatile, and they can be difficult to trade. So before you invest your hard-earned money in cryptocurrencies, make sure you understand what you're getting into. Do your research and learn as much as you can about the different types of cryptocurrencies available. Then decide if investing in them is right for you. If you'd like to know more about how to select the perfect cryptocurrency for investment, make sure to watch our video in the top right corner. In this video, we'll tell you everything you need to know to build enough knowledge for picking a good investment. Not understanding the risks. Cryptocurrencies are a new and risky investment, and it's important to understand the risks before you decide to invest. Here are some of the risks you need to be aware of. The value of cryptocurrencies can go up or down rapidly, and you could lose a lot of money if you invest at the wrong time. Due to the market's volatility, you should be wise to invest only what you can afford to lose. Cryptocurrencies are not regulated by any government or financial institution, so there's no guarantee that they will be worth anything in the future. However, by researching the project you are investing, you'll have a better chance to pick a project that will be here in the next 5 years. Cryptocurrencies are vulnerable to hacking and fraud, so you could lose your money if it is stolen or if someone scams you. Crypto scams have been around since the beginning, and they are getting better and better every time. So make sure you spend some time learning to identify them and never give your secret key to anyone. Understanding the risks cryptocurrencies carry will give you an edge over most newbie investors, as you'll be able to better assess whether the potential rewards are worth the risks. However, even if you understand the risks, you should only invest an amount of money that you are comfortable losing, as there is always a chance that your investment will not pan out. Don't invest more than you can afford to lose. When you invest money, you are essentially placing a bet on the future. You hope that your investment will grow over time so that you can eventually sell it for more than you paid. However, there is always the risk that you could lose some or all of your investment. This is why it's important to only invest what you can afford to lose. If you're not comfortable with the possibility of losing your money, then it's probably best not to invest at all. Instead, save your money and wait for a more favorable opportunity. One of the deadly mistakes a crypto beginner can make that we see all the time is borrowing money to invest. If the investment does not go your way, the repercussions of getting into debt can affect your personal and financial life for years to come. Not storing your cryptocurrencies in a safe place. One of the biggest mistakes investors make is not storing their cryptocurrencies securely. Cryptocurrencies are digital assets and can be stolen or lost if they are not properly protected. Therefore, investors should store their cryptocurrencies in a wallet that is encrypted and password protected. They should also back up their wallets on a regular basis in case of theft or loss. Cryptocurrencies can be stored in a variety of ways, including on an exchange, in a digital wallet, on your computer or phone, or in a physical crypto wallet. The safest way to store cryptocurrencies is in a cold storage wallet, which is offline and not connected to the internet. When choosing a place to store your cryptocurrencies, you should consider the following: ease of use. You should be able to easily and securely access your cryptocurrencies when you need to. Security. The platform or wallet you use should have robust security features in place to protect your cryptocurrencies from theft or hacking. Insurance. Some cryptocurrencies exchanges and wallets offer insurance against theft or loss. This can give you a peace of mind knowing that your cryptocurrencies are protected. Location. Some countries have more favorable regulations around cryptocurrencies than others. You may want to consider storing your cryptocurrencies in a country with more friendly regulations. If you'd like to know more about how to securely store your cryptocurrencies, make sure to watch our video in the top right corner. In this video, we'll tell you everything you need to know to securely store your crypto in a cold or hot wallet. We'll also discuss what the best wallets to use are. Not aware of the hype. Cryptocurrencies are a new form of investment, and as with any new investment, there is a lot of hype around it. This can be dangerous because it can lead people to make bad decisions about where to invest their money. For example, they may invest in currency that is not actually worth anything, or they may invest too much money in one place and lose everything if the currency does not succeed. People can lose a lot of money if the price of the currency is based on hype rather than the actual value. To avoid becoming a victim of hype, it's important to do your own research before investing in any cryptocurrency. This means looking beyond the headlines and taking the time to understand what the currency is actually worth and whether or not there is a market for it. Investing or trading based on FOMO. Many people invest based on FOMO or the fear of missing out. FOMO, or the fear of missing out on a unique opportunity with potential profits, is a common psychological condition among traders and investors. Selling too soon, purchasing when prices are high, as you feel like you're losing out on an enormous increase, and even investing in a questionable project that is backed by hype and a big promise are all examples of FOMO. While getting rid of FOMO entirely is difficult, you can actively combat it by developing a trading or investing strategy and creating a set of rules. Developing a trading or investing strategy. When it comes to trading or investing, one of the biggest enemies you will face is FOMO, fear of missing out. This occurs when traders or investors make decisions based on emotion rather than logic, which often leads to them making poor investment choices. To overcome this fear, you need to develop a trading or investment strategy and stick to it religiously. Your strategy should be based on sound reasoning and your own personal goals as an investor. It should also take into account market conditions so that you can make informed decisions about what trades to make. Creating rules for yourself will help limit your ability to make FOMO-based decisions. Some things to consider when developing your strategy. What are your goals as a trader/investor? What is your risk tolerance? What time frame are you looking at? What assets do you want to trade or invest in? What indicators will you use to make decisions? Once you have answers to these questions, you can start putting together your strategy. Remember, the goal is to make informed decisions based on logic, not emotion. If you find yourself getting caught up in FOMO, take a step back and ask yourself if the investment you're about to make aligns with your strategy. If it doesn't, then it's probably not worth making. Believing everything you read. When it comes to crypto, it's important to be discerning about the advice you take. There's a lot of false hype out there, and taking bad advice can lead to costly mistakes. Major news sites often release negative or threatening news stories about crypto. However, it's important to remember that many of these stories are exaggerations or clickbait designed to generate fear, uncertainty, and doubt. FUD. Don't let FUD scare you away from trading or investing in crypto. Instead, do your own research and only believe what you read from trusted sources. When in doubt, remember that not all advice is created equal. Be careful about following tips from people you don't know or have never heard of. Instead, do your own research and only invest in what you believe in. With a little due diligence, you can avoid falling for false hype and make smart decisions about your trading strategy. So, there you have it. The biggest mistakes people make when buying cryptos. Hopefully this video has armed you with enough information to avoid these costly errors and invest in crypto safely and securely. Remember, do your own research, don't trust everything you read on the internet, and if in doubt, consult a professional. If you like this video, please share it with a friend that would enjoy it as much as you did. Subscribe to our channel and smash that notification bell so you don't miss any of our future content. Please tell us, have you ever made any of these mistakes? Or perhaps you've made others we didn't mention in this video. We would love to hear all about it and empower our community to make better decisions in the future. As always, thanks for watching and happy investing.